All right, so let's take a look at. I want to go over deep liquidity grabs. We had a big one yesterday that came in again. So we have our standard liquidity grabs. The video we went over yesterday, where we're looking for a pullback into our 25 zone or our yellow trigger entry reversal when it comes up on our trend zone. So play yesterday's video goes over exactly. I don't want to repeat the same thing as we did yesterday. I'm going to go when the market pulls back into a deep liquidity grab where the the market pulls back into a level such as this yesterday into my deep zone, and we had a nice continuation. So let's look at the entire week. Let's say look at the entire week. So Monday was the 11th. So here's the 11th. Here's Tuesday. Here's Wednesday yesterday. And I went over this yesterday to look for this buy setup to happen. We went over that in the video. It actually came right down to it and bounced right off that zone. And here's today's current trading zone currently. So let's take a look at Monday. And then we'll come into Tuesday, and then we'll look at yesterday, and we'll look at today, what we're looking for. So what the market likes to do is, let's just take a look at the overall, what is a liquidity grab? So when the market moves up, you come up, let's say the market's moving up. What the professionals like to do is they like to break this low where the market's been. And this is where they're grabbing liquidity. They try to get the counter trend traders coming in. So let's say the market is in a move up and the smart money wants to push the market up for the day. They'll break this low. They'll grab liquidity from this low at that level, which is our buy zone. And then they'll bring it higher. Okay, so what they're trying to do is they're trying to break this low because the stops will be below this low area. And that's why our zones work so well. The market's grabbing liquidity to stay orderly and move back up. Then what they'll do is when this market moved off this high, this will be the next ledge where they're going to try to grab liquidity. They're going to pull it back below this low and grab more liquidity, get the counters to come in, get stopped out. So they're going to break this low, grab more liquidity, bring it lower, breaking this ledge right here. And then continuing the market to move higher, such as that. So that's basically what they do is they're trying to break these key support resistance levels. And then they bring it lower or higher. They're grabbing liquidity to push the market higher and stop out the counter trend traders. So essentially that's what they're trying to do. So if we look at what happened, let's blow this up and let's take a look at the market. So one of our big pushes of the week was at this level. So they came up. Here was the ledge. Look what the smart money did. They broke it down. The counters came in right into my liquidity zone. This is my liquidity zone at or inside liquidity zone. I just cannot break through it. That's my liquidity zone. And then she came right out of it. And the market took off here Tuesday from 16 3/4, and it moved all the way up to 60, 40, 42. Well, same thing yesterday when I was doing the video. We're right here at the video yesterday. Look at the heads up you get on this. I did the video yesterday at 8:30 in the morning, right here. 8:30 in the morning, I did the video. And I said, we're looking for a liquidity grab to come down to this zone or this confluence zone at this level. And we're looking for, if you look at the video, looking for it to come down here or here. And we're looking for it to get a reversal and get long. Well, the new liquidity grab zone came up at exactly 9:32 right after the New York Open. 9:32 and 27 seconds. So price was at 64.93. The pullback to the liquidity or the institutional order flow, what they're trying to do is they're trying to pull it back to here from 93, get into this zone and drive it higher. All right, there's your zone. They came right down to it. So your buy zone was the low of the zone was there, was right around 67 to 70, a 3-point zone. So we had a 3-point zone to buy. So we're at 90, sitting at 93 at 9:30 in the morning. Our buy zone is 67 to 93. I mean, 67 to 70. 25 points off where the S&P was. 25 points away. They brought it all the way down for 25 points. And from 11:30 to 2 o'clock in the afternoon, they grabbed liquidity. And then they brought it straight up from the 70 straight to 93 again, exactly when we were doing the video. Almost 24 points of potential to the upside. That's how these liquidity grab zones work. Major heads up. So you had a 2 to 4 hour window, heads up, when you're looking for a deep liquidity grab. These are very leading indicators. If you look here, when you get a break retest, you don't have to wait that long. The 8:30, the break retest was just after 8:30. But here, if you were outside at 8:41 and the deep liquidity grab was 10 o'clock, an hour and a half heads up, the market moved from 60, 40, 42 down to the small buy zone of 07. It fell 35 S&P points to grab liquidity. And what did they do? They brought it down to the buy zone. They grabbed all that liquidity in the buy zone. They brought it back up. Now that news came out, let's look at today. Look what they're trying to do. We have 2 liquidity grab zones. It's got to reverse. See how it did not reverse inside the zone. So this zone is no longer valid. So my next buy zone on this deep liquidity grab is where? There's only a couple things can happen from my buy zone here. I'm going to have a deep pullback inside of this zone. And we're going to look for a rebound out of zone. Or it's going to shift on me because, see, it closed one candle below that buy zone. Since it closed one candle below that buy zone, this zone is no longer valid. That's how accurate these zones are. This is a 100 and 200 zone on the 24/7 chart. We use a 25 zone, 100, 200. I took the 35 zone off because it's just way too many zones for you to watch. You don't even need it unless you're HV and LVA, just additional zone if you want. The 100, 200 zone, they don't come up very often. The 25 zone, you get 2, 3, 4 trades a day. The 100, 200 zone, you may get 1, 2 trades a day, a session. With the 25 zone, 3, 4, 5, maybe 6 trades a day. So what this zone, when you come down the zone, you can only do a couple things. You come down to the zone from being above it, and it's got to hold the line in the sand right there. It did not. It closed below it to rebound. So there's that. That's what it did all week this week. Or what it can do, it can get above this zone. I'll show you, I did this a couple days ago. And get above the zone, retest this zone, don't close below the zone, and get a pull-in candle. That happened after news a couple days ago, and the market just shot straight up. What that looks like, here's just testing the zone, taking off, testing the zone, exploding off. Right here, it looks like this. Where you break below the zone, it doesn't, it gets above it, should close inside of it, rebound, did not. Then they closed it above it, retested right to the exact tick on it, and it took off. Look at that for the whole day. That was 16.5, like I said, to 42. So that's all. That's the only way to trade this chart. Is you're looking for a rebound inside the zone. It did not do that. Or below here, this deep zone. Or it closes above this zone, closes back inside of it, gets a pull-in candle, and you go. All right. These are very, very leading. They're extremely accurate when they get inside these zones. And you know exactly when the reversal is going to happen based upon that pull-in candle. If it closes one candle, just one candle outside of that zone, you cannot trade it. Any of my zones. The 25 zone, you can't do it. All right, so they're trying to possibly bring it down to 42 to 45.5 zone. We're at 62. And Cherry's like, wow, it can't go that low. Well, you said that yesterday when I was doing the video. If you said that yesterday was doing the video at 93, it sure did. It came right down my zone, and it took right off. Day before, came right down to my zone, and it took off. Day before, same day, came down to my zone, break retest, took off. Here's where it breaks through it, so you can't buy it, and retested right inside my zone, and it was beautiful. Retested, touched the top of my zone almost to the tick. Gave a pull-in bar, and this is 99 down to 87. 12 S&P points, just like that on a break retest. So that's how you trade this, the deep zones. We go over the 25 zone all the time because you get about 4 to 6 trades a day on it. This one, you're looking about 2 trades a session. And look at the heads up you get. You'll get an hour, 2 hour, 3 hour, 4 hour heads up when this thing should reverse. It's going to break retest, or it's going to come down and push off of it. All right, so that's our upper left chart for deep liquidity grab. Let's look at our smaller charts. Where's our buy and sell zones? Very simple to see. What I want to see the market do, what we want to see the market do, so that's our deep liquidity grab. We'll keep an eye on. We only get 1 or 2 trades a session on that, if any, because it's deep liquidity grabs. Let's look at the more shallow liquidity grabs. Well, our trend is down. Trend's down. Right, here's our trend zone, parallel down. So we're looking for the market to come up into our trend zone. You'll get a yellow entry candle if it does what? If it comes inside of this bubble and we get a pull in. We're looking for a move down. The second way, if it gets inside my 25 zone. So here's the 100 zone, my 200s of plus signs, 100, my deeper liquidity grabs. Here's my shallow liquidity grabs. My 25 zone is here. It's going to keep adjusting. So that's why I'm looking for a reversal. I'm looking for a standard candle reversal in my red box or I'm looking for a trend zone reversal where you get a yellow reversal inside of my blue. Now what happens if you get inside of this half moon right here, or this quarter moon, if it comes right here in this quarter moon and you get a pulling candle reverses, you got confluence. That happened yesterday with that confluence short. That's the best of the best. It's the best you're going to get because you're getting inside my 25 zone and the trend zone for a yellow trigger reversal. Now, once you get in, what's our targets? Well, we're going to use market profile. What did I say yesterday? I said a breakdown the market, and I marked these up at 8:30 yesterday. They're valid all week. We look at previous market profile to find out where our holes in the market are. What's our target for today? Our target on this move is 64.40, where all the participation has been in the past. The smart money is going to try to push it to the previous market profile levels. So I marked these up yesterday. The breakdown the market was 68.5. So now 68.5 is going to be resistance. So what we like to see happen is, if it wants to go back up, come and test it, get a pulling candle, reverse it, and let's get down to 40. Or it may not even retest it. Let's just come up inside of my zones and let's get down to 40. And if it breaks 40, let's get down to 64.10.5. Now, where did I get these targets at? Because this is our daily zone. So anybody that's ever traded market profile to me is one of the best indicators of barometers of the market. It's a roadmap of the market. Nothing can beat market profile if you trade it the correct way, in my opinion. Since 1985, this has been the best barometer of the market because it tells you where the participation is. And these are like magnets. If you listen to some of the top professional traders out there the last 20, 30, 40, 50 years, they'll tell you the market is a magnet where this market likes to move to where the participation is. So this is our daily value, high value, low value, control points and most volume traded the blue. If I get outside of low value area, it's going to try to find value at the next level. It's going to find value here at 68. Going to try to find value here at 40. It's going to try to find value at 64.10. So the market likes to gravitate towards that value area because the market's very orderly. It's not chaos. Whoever says the market chaos, they need to rethink their thought process because if it was chaos, this market would move up and down. You'd have parabolic moves up and down every single day, up 1,000, down 1,000, up 2,000, down 2,000 on the Dow. It doesn't happen that way. It's very orderly. So how do I derive those levels? I just look at previous market profile. I found out where the market participation is because traders ask me all the time, how'd you pick that level? You pick that level 2, 3, 4 hours before ahead of time. Sometimes they'll come down within a couple ticks and that'll be the low. If you look over here, almost to the tick, just a few ticks on market profile here. They're like, how do you derive those levels? Well, these are all the participants in the market. It's your roadmap. It's your map quest when you get in your car and you try to drive from point A to point B. You don't wing it and try to drive from Florida to California at a certain destination and wing it. Well, I just want to go this way, west or east. West. You don't do it that way. You get your roadmap out. You get your map quest on, it tells you what to do. Same way with market profile. It's telling us this market's going to try to gravitate today towards 64.40. So when we get pulled in on this retest, if we stay below 60, 64, 68, if we stay below it, the market's going to try to get down to 64.40 today. Don't make it any more difficult than that. All right, so that's what we're looking at for today. So now we're inside of my zone. When do I get a yellow trigger candle or an entry candle? It's not confluence because it's not inside my 25 deep zone, my deeper zone of 25. It's inside of my trend zone. But if I get since I'm using a 135 Unirinco, it's got to reverse 35 ticks here. And then once it does, your speakers will go off. A yellow trigger entry will go off. And we're going to look for a entry candle. And we're going to look for 40. We're going to look for this market to move down to 64.40 on this trade. So 64.40. It's 8:42 in the morning. I'm looking for 64.40 target as long as I stay below 64.68 and we get pulled in the market. All right, so we're looking for 64.40. It's at 64.62. We got 23 points of potential if we can get a pull-in candle to pull us down. It's that simple. Read the market. It'll tell you exactly what is doing. If it's going lower, we're going to try to sell low and buy lower. If this is going higher, we would try to buy higher and buy higher. All right, so that's our next trade setup. What we're looking for. If we stay below 64.68, market participation is right there. We're looking for 66.40 once we get pulled in on this. Okay.